Hello, and welcome to Simple Finance Bites. I'm Ernest. Today, we're talking about rebuilding your credit. Whether you're starting from nothing or coming back from something like a bankruptcy, everyone thinks the fastest way there is paying a credit repair company. Simple Finance shows you can do everything that actually works yourself for free, and I'll walk you through exactly how. Let me start with something most people don't know. When you open a business bank account, the bank hands you a list of restricted or high risk business types they will not casually do business with. Credit repair services sit right there on that list, next to things like gambling operations and controlled substances. That's not my opinion. That's not a personal finance blogger being dramatic. That is banks, the same banks that process transactions for adult content companies and payday lenders without blinking, looking at the credit repair industry and saying, this one needs extra scrutiny before we touch it. Sit with that for a second. Banks trust credit repair companies about as much as they trust businesses selling substances that are illegal in most states. I hadn't really paid attention to this until recently. I was moving my business bank accounts from one institution to another. And when I was opening up the new accounts, I looked at the list of businesses that they either don't allow or have trouble with. And I noticed that credit repair was in there with gambling and a bunch of other ones. And I thought, that's really odd, but that does make sense. And here's why that matters right now. If you're coming out of a bankruptcy or you've never built credit at all, you're exactly the same person these companies target. We're talking about the credit repair companies, credit building companies. You're scared, you feel behind, and somebody is promising to erase the damage for a monthly fee, and that sounds like a relief. What actually happens is they send dispute letters to the credit bureaus, claiming accounts are inaccurate, hoping something falls off because the creditor doesn't respond fast enough. That's it. That's the whole service. You can send that same letter yourself for free through each bureau's website. Legally, they cannot remove accurate negative information just because you paid someone to ask nicely. If a company promises they can, they are lying to you. And in a lot of states, that promise is illegal to make in writing. If you run into one of these outfits making guarantees like that, report them to your state attorney general's office. It takes 10 minutes. It's free, and it's one of the only ways this industry gets held accountable. Quick note, if you're finding value in this episode, subscribe to Simple Finance Bites on Apple Podcasts, Spotify Podcasts, or YouTube Podcasts. Leave us a 5-star review on Apple Podcasts, like us on YouTube, and share this with someone who you think needs to hear it. So if paying someone doesn't work or is illegal, what does? Your credit score comes down to two things that matter more than anything else combined. Do you pay on time? And how much of your available credit are you using? Everything else, how long you've had credit, the mix of account types, new applications, all of that matters, but it's small next to those two. That's the whole secret the repair industry doesn't want you to think about. There is no code to crack. There's no insider track. The algorithm is watching your behavior over time, and it rewards boring, consistent, predictable behavior. This is one of those things that I had to learn just like everyone else. When I was young, 18 years old, I took out credit cards, I made mistakes, and I learned over time. And I always wondered how the credit score actually worked. What caused it to go up? What caused it to go down? Obviously, not paying your bills on time causes it to go down, but what were the inner workings of this thing? And that's when I delved deep into it in my early 20s and figured out, this is how it works. Now, here's the thing. Because the algorithm is watching your behavior over time and it rewards boring, consistent, predictable behavior, that tells you exactly what you need to build credit if, let's say, you're 18 years old and you're just starting out, or you recently filed a bankruptcy and you're trying to get back on your feet. That gives you the roadmap. It gives you the blueprint. It tells you exactly what to do. And this is actually good news, especially after a bankruptcy. A bankruptcy is a serious mark. We know that. No judgment here. But it does not permanently disqualify you from having good credit again. It fades in weight the further away you get from it, and every single month of on-time payments after, it starts working in your favor immediately. You're not waiting 7 or 10 years to start seeing results. You're waiting for that long for the bankruptcy itself to fully drop off. But your score starts recovering right away as new positive history builds on top of it. That's the important thing to point out here. It's not that the bankruptcy is going to all of a sudden disappear and your credit score is going to go up. And it's not that if you're brand new and starting off, all of a sudden you're getting a high credit score. You're doing things at the same time. Assuming you have a bankruptcy, while the bankruptcy is slowly falling off over time, you're actually building your credit score up underneath it. And the minute it falls off, your score skyrockets. The people who stay stuck are usually the ones chasing a shortcut instead of just starting the boring process today. So here's the actual system. It is genuinely simple, and it applies to both a young person who's just starting out and having trouble getting a credit card, and or a person who filed bankruptcy or has some other financial blemishes and needs to build their credit again. The number one way we recommend to do this is with a secured credit card. Now, secured credit cards are very simple. You put down a deposit, usually a small one, say $500, and that deposit becomes your credit limit. So now you have a credit card with a $500 limit, but you guaranteed it with your own money by putting a deposit down. The bank isn't taking a risk on you yet, so they don't need to trust you yet. They just need your money sitting there as collateral. It's fair, nothing wrong with that. Most credit unions offer these, and a lot of them will graduate you to a regular unsecured card after a year or so of good payments. Step 2 is you use it for one small recurring bill. And this is really the secret here. You don't want to get a $500 credit limit with a secure card and then go charge $500 to it. That's the wrong way to do this. What you want to do is get one small recurring bill. Think of something like a streaming subscription that costs $10 or $15 a month, or a gas fill up on a car that's like, less than $100. Not because you need the credit, but because the card needs activity to report to the bureaus. That's important here. You want activity constantly happening on that card every single month. The bureaus are not going to see what you're spending on, but they will see that you have a balance, you pay it off. You have a balance, you pay it off, right? So that's the machine here that you want to build up. Step 3, and this is the one people always mess up. You pay it off in full every single month. Not the minimum payment. You pay it in full, okay? And this is where the prepaid lifestyle actually connects directly to credit building. Before you finance anything or lean on a credit card to stretch your budget, remember, you should only be spending what you already have sitting in your account. A secured card used this way isn't debt, it's a reporting tool. You're not borrowing money, you're renting a small amount of trust from a bank, so they'll tell the bureaus you're reliable. Here's another one that I didn't realize when I was younger. I didn't even know that there were secured credit cards. I got actual credit cards, and because of mistakes that I made at a very young age, a little bit later I was only able to get credit cards from predatory lenders. Once I figured all this out, I went back the other route, closed down all the cards I had, took out a secured card, and within a year, everything was gravy and never looked back again. But it's a couple of things, right? It's learning how to use credit responsibly in addition to using the secured credit card to build up your credit history. Now, you need to do this every single month, and you don't need a credit repair company, a dispute letter, or a paid service watching your score. You need 12 to 18 months of boring, predictable, on-time activity. That simple. Let's talk about what this actually looks like month to month, because knowing the system and living the system are two different things. Month 1, you open the secured card. Set it to auto pay in full and attach one small bill to it. Again, one small bill, $10, $15, $20 tops. Month 2 through 6, you're just letting it run. Don't check your credit score obsessively. Don't look at it, because all it's going to do is give you even more trauma. Just ignore it for now. Don't apply for other cards to quote unquote speed things up. You're not doing that. Every time you open a new credit line, it actually dings your score some. So you don't want to be opening up a bunch of cards. One secured card is good enough for 12 to 18 to even 24 months to get you back on track. Every new application creates a small temporary dip, and stacking several of them while you're rebuilding just works against you. So don't do it. One card. Around the 6 to 12 month mark, most secured card issuers will offer to convert you to an unsecured card and refund your deposit. Or you'll qualify for a basic unsecured card on your own. When that happens, keep the original account open even if you stop using it. Okay? Keep that in mind. Especially, and it should be a no annual fee card. That's probably another thing I should talk about here. Do not get cards with annual fees as your first credit card or as a rebuilding card or a secured credit card. No annual fees. We are very much against annual fees. There are reasons to have cards with annual fees much later down the road, and those involve much more complicated situations. But for 99% of people, for you and for me, annual fees are not a good thing. Do not get a card with an annual fee. That's important. Okay? So, once the bank offers to convert you to an unsecured card, again, it could be 6 to 12 months later, it could be longer, right? If you had a very bad bankruptcy and your score is low and the bank is still not ready to graduate you, it's okay. It doesn't matter. Just keep using the secured card until the point where you're either graduated or you qualify for an unsecured card. But do not do it in less than 12 months' time. That's important. Once you've done it for 6 to 12 months, again, keep the original account open even if you stop using it. The length of credit history matters, and closing your oldest account resets part of that clock. This is another important thing here. It's another reason you want a no annual fee card. You can keep that open forever and never have to worry about paying a fee on it, right? So just keep it open. The biggest mistake I see is people treating this like a race. It's not a race. It's a maintenance habit, a marathon, right? It's the same way brushing your teeth is a maintenance habit. You're not trying to win. You're trying to never have the problem again. Brushing your teeth is actually a great example for this, right? It's a maintenance habit. You're doing the same thing over and over, day after day. And it's not about winning, and it's not about doing it as fast as possible. It's about doing it the right way every single day, day after day, so that you never have a problem, as in bad oral hygiene, again. I'm not saying not to buy anything with credit ever again. I think that's a big thing that, those of us in the personal finance space, the simple finance space, people like Dave Ramsey, is they agitate people, or they scare people, or they upset people, right? Because they're like, don't buy this, don't buy that, live like a hermit. I'm not saying to do that. I'm saying you can buy whatever you want as long as you can afford to buy it cash outright, and let the card just be the receipt that reports to the bureaus. That's it. You're basically treating a credit card like a debit card. Think of it that way. This is something that I had to learn the hard way as well, right? And it was a credit card, just in the name credit card, you think, oh, the purpose of this thing is to borrow money that I don't have and buy things with it and then pay them back later. That's what they want you to think, because once you start doing that, you're paying them interest. Don't think of it that way. Think of a credit card like a debit card. For example, American Express has these cards called charge cards, and they're meant to be paid off every single month. Now, even that's gotten a little wonky lately, but the point is they exist. You need to treat your credit card like a debit card, right? And this connects directly back to the rest of the simple finance system. Your credit score isn't the goal, it's the door. A rebuilt score gets you better rates on the rare things you might actually finance, like a home, right? Because think about it, that's really the only thing we should be financing, because that's an appreciating asset, at least somewhat appreciating. Nothing else appreciates like that as far as loans that you're taking out. An automobile is a depreciating asset. Shouldn't be financing that. Credit cards, whatever you're buying is depreciating. Shouldn't be financing that, right? But a rebuilt score gets you better rates on the things you need to finance, like a home, and it gets predatory lenders and rent-to-own scams out of your life for good, because you stop looking like an easy target. So let me give you the key takeaway from today. Nobody can shortcut a credit score back to health, no matter what they charge you. But anybody can rebuild it or build it from scratch on their own for free, one on-time payment at a time. And again, this is a lesson that I had to learn the hard way. But once I learned it, everything improved after that, right? And there's two pieces you're putting together here side to side. One of them is how to properly use a credit card, and the other is not spending more than you have, living within your means. That's actually the more important part. If you can think of a credit card like a debit card and you can say, I will only put on here what I can afford to pay off every single month when the bill is due, you've already won. Just that one thing, you've already won, right? And then after that, it's a matter of just padding your score over time. So thanks for hanging out with me today on Simple Finance Bites. And a quick note, this is all financial education, not financial advice. So please see the disclaimer in the show notes and on our website before making any financial decisions. If this episode was helpful, subscribe and leave us a review on Apple Podcasts, Spotify Podcasts, YouTube Podcasts, or wherever you listen. Then share it with someone who needs to hear this content. For more insights on simple finance and building real wealth, head to simplefinancebites.com. And if you want the deeper insights behind these episodes, plus your free Simple Finance blueprint, join our monthly newsletter. Connect with us on Instagram, Threads, and Facebook. The links are all in the show notes. Before we wrap up, a quick security reminder that applies to everything we've discussed today. Enable two-factor authentication on your email and banking accounts right now. It's the simplest way to protect the financial progress you're making. Until next time, keep it simple, stay focused, and take control of your financial future.